$100,000. Well, that's a lot of money, and that's how much money we've made through investing. Well, was it overnight? Certainly wasn't, but stay tuned, check it out, and we'll find out what happened. So the big question is, how long did it take us to make $100,000 in investments? Well, it certainly wasn't overnight. In fact, it was over a long period of time. We've got the numbers to back it up. We're starting our numbers from the 1st of the 1st, 2019. Let's check out those numbers. We started off in 2018, April of 2018, when we started investing, because we've been going for just over 11 years. We started in, when was it? June 2014, and the main purpose was to pay off the house. So we did that, and we started doing a little bit of investing, but nothing major, drip feeding along until we'd got the mortgage paid off. And the mortgage was paid off in early 2020, and that's when the investing journey really began. So if we have a look through some of these columns here, I'll explain how they operate. So we started calculating the investments as of the 1st of the 1st, 2019. That's pretty much what we've been doing with this. We didn't have a lot in there. We had about roughly around $24,000. By the end of the year, we'd put in an additional $16,000, and we'd gained almost $8,000. So by the end of 2019, the end of year balance was $48,213. We'd made $8,000 worth of gains in that particular year. We've also got some breakdowns here. We've got the month, the week, of how much supposedly these things are worth and how much dividends we made during that particular period. So for the entire year of 2019, when we ended up with $48,000, we'd made a whopping $73.46 out of dividends, which is not a huge amount whatsoever. Obviously, we put more money into stocks, and by the end of 2020 we'd made $943.17. And obviously, if you have a look at this particular table here, you can pretty much work it out for yourself. Our daily income, in order to meet our core expenses of $26,000, $26,009.52, I believe. In fact, that went up today because we got the rates bill, and they've pretty much tacked another $6 or $7 a week onto that. So I'm going to have to make some more calculations for our projected minimum core budget expenses and all that sort of stuff, which we will do in the near future. So things obviously increase in price over time, and when the council's going to be doing this every year for the foreseeable future, food's going up, petrol's going up, whatever's going up, yep, you're still got to adjust, and you've got to account for that, and that's why you invest in the first place, so you can cover those things and hopefully have a bit more on top. In terms of the core $26,000 amount, at that stage, we're looking at the dividends. They covered 0.28% of our core annual expenses, which is not a lot. And if we look at the last year, 2024, so 31st of December 2024, we were covering 28.39% of our core expenses from dividends, which in this case is $7,500. So $7,500, well, roughly times 4, you're going to get around $30,000. So yeah, it's close enough. The numbers do actually work, believe it or not. So 28% of all of that, and yeah, it's pretty much $26,009.52. However, based on that, the daily income for that is $20.57. That's how much we're making on average from dividends last year. We need $72 to pretty much break even, because the goal of this portfolio, you're probably aware of capital gains and how they impact things. So here in New Zealand, if you are from New Zealand, good on you. Capital gains are not currently taxed. The Labour government is looking to change that probably. And yeah, the people who vote for Labour will be all for it, tax the rich and all that sort of stuff. Well, I'm certainly not rich. And yeah, maybe it's a good thing, maybe it's a bad thing. I don't know. I'm kind of sitting on the fence there. I prefer they don't, but I can see some benefits of it as well. However, we need $72 a week to survive, a day to survive. At the moment, from dividends only, we're only getting $20.57. You can see the end of year balances here. We've got $363,000 as of the 31st of December last year. That's ballooned up to 421,000 at the time of this video, which is the 14th of August 2025. We've put in almost $28,000 more capital this particular calendar year, and we've actually gained $30,000 on this entire portfolio. And the dividends currently sitting just under $5,000, but they are projected to move forward. We'll go and have a look at that shortly to see how much they are. The raw numbers, this is the real thing. A lot of these YouTubers, they don't show you the real numbers. We do show you the real numbers. Unfortunately, the year 2022, you can see this is all red here. Well, reddy pink anyway. Yeah, not a great year. We actually lost $27,450. We'd put in $49,000. The portfolio actually went up by a total of, you can see the difference here, roughly around $22,000. So we put in $49,000 and we lose, well, we only gain $22,000. The difference is over here. The actual losses on the portfolio. The next year it recovered, but if you were looking at that, you know, over these 2 years, we still hadn't even sort of got back to where we were prior to the pandemic, as it were. But last year was the best year that we've ever had, obviously. Almost $44,000 worth of capital gains. Only a percentage of that is in dividends. And the reason why only a percentage is in dividends, because some of it's in KiwiSaver, some of it's in another pension fund, some of it's in, what else have we got there? Other fixed assets that we can't easily, well, essentially they're non-dividend paying investments. Put it like that, yeah. Ultimately, when we hit 65 and we are subject to getting the New Zealand superannuation, aka the pension, we'll probably convert all that money into dividend stocks. Based on the 4% rule, we'll hopefully be able to boost this up to cover our core expenses at least, just from the investments. Forget about the super, the pension. That's the ultimate goal, is to live off the dividends with this portfolio. So we have made a shade just under $105,000 in capital gains. If we add all of these columns up, it's $104,980 something dollars. Close enough. It's taken 2,638 days. So it's certainly not a get-rich-quick scheme, but it is a get-wealthy scheme over a long extended period of time. And with compound interest, that is only going to grow at an exponential rate over time. If we keep investing at the current rate that we've been investing, you know, it does go up and down. Last year was a poor year, and that's because we had to pull capital out to go and fix the roof. We had to get some windows, we had to do a bunch of other repairs and maintenance and buy another car. Yeah, it's another story, a long story. However, yeah, these things cost money, so we actually had to pull money out of the investments. We still invested as much as we were, but we had to pull money out of the emergency fund and out of our other investments to cover these costs. But fortunately, we had the money to do it. This year, we're expecting that this, based on the current projections, should get up to about $49,000, which would be amazing, considering we need $26,000, well, 26 to 30,000. 30,000 to be on the safe side, in order to cover our expenses. If we can make 49, 50,000, well, we more than do that. The only problem is we don't want to be pulling out capital investments. We really want to live off the dividends or be able to cover those costs with the dividends, and at this stage, as you can see, they're not even close. This year, I'm projecting that we're going to hit probably $9,000 by the time the end of the year is done. We'll have a look at those dividends now. Here's the dividends that we've made so far. As you can see, 2018, when we started investing back in April, end of April 2018, by the time the year had finished, we'd made almost $21. Not a lot of dividends, but obviously we were able to invest more money the following year, $73 worth of dividends in the second year. Once the mortgage was paid off, early 2020, yes, things balloon up, we invest a lot more money. We're almost up to $1,000 worth of dividends for the year, and the following year, another great year, $2,600, so on and so forth. So last year we made $7,500. At the moment we're sitting at $5,000. Nothing's been paid out in August so far, but if we have a look here, you can see the year-to-year numbers. Sometimes they go up, sometimes they go down. The market is volatile. Sometimes companies pay out, sometimes they don't. Most of the ones that we've got are paying out. You can see here in January, well, January this year has definitely been better. February is not a high paying month for dividends in New Zealand, so we don't have a lot of stocks that are dividend paying stocks for February, and there's not really a lot of options to buy. March is a great month. We've got we didn't make as much as last year, but we did make a whole pile in April. Some of that is because companies will potentially, they'll vary when they actually pay their dividends out, so they could be a few days late, rolling over into the next month, that sort of thing. But overall, between March and April there, we're looking at $2,800, roughly $2,800 the year before, maybe $2,200. So it definitely did increase, maybe $600 odd over those 2 months overall. May, not a lot happens. June and July, again, same sort of deal there. July, we got an extra roughly around $500. And we've got, based on these numbers here, for the last 4 or 5 months of the year, because we're into August now, so we've still got September, October, November, and December to go. If we add all those up, we're talking $3,000, probably another $4,000. This is where I get my $9,000 mark from. Plus, we'll be investing into these dividend-paying stocks over the remainder of the year. So it could be maybe $9,100, $9,200, all things said and done. It will be amazing once we hit the $10,000 mark. And that should be sometime next year. Well, by the end of next year anyway. Probably around December, we're definitely going to know for sure. And that about wraps it up for this video, so thanks for sticking around. Hope you enjoyed it. Hope you learned something. Don't forget to hit the like button, subscribe. Leave a comment if you really must. And we'll catch you in the next one. Catch you later.